Good morning. Happy Friday, the 11th of December. I'm Jessica Ramir, a market analyst with Bell Direct. Well, coronavirus vaccines have come back into full focus today. CSL and the University of Queensland have abandoned their vaccine trial as the risk of failure was too high. The government had ordered 51 million doses of the vaccine, but there are still 3 successful vaccines in the mix, either being rolled out in parts of the world or awaiting approval. And Australia has orders with all of them, including with Moderna, AstraZeneca and of course Pfizer, with their jab already being administered in the UK. The other hot topic this week that continued to make headlines overnight was the lack of progress on a fresh round of US stimulus. House Speaker Nancy Pelosi said bipartisan negotiations were leading to great progress, but both sides were still debating over a liability waiver for businesses. Now, the third item making headlines overnight, US unemployment claims, which rose more than expected last week, with jobless claims jumping to 800,000, which is the highest ever level since October. The S&P 500 fell slightly, 0.1%, the Dow losing 0.2%, while the Nasdaq gained 0.5%. As for big movers, Twitter shares up 8%, Starbucks up 5%, Apple up 2%, and Tesla gained about 4% after recently entering the S&P 500. Oil stocks did well, like Occidental Petroleum up 10% and Chevron up 3%. Really, after the oil price made a significant jump to a new 9-month high, up 3% to $46.88 US. As for other commodities making headlines, the iron ore price continues its war ahead, jumping to $151 US a tonne after gaining 3%. Collectively, it's up a massive 63% this year. The copper price also making green tracks, up 2%, while the gold price is steady. So what to watch today? Well, if the futures are correct, the broad market looks like it'll fall 0.5% today, which will mark the second day of retreats. But importantly to note, this year the ASX 200 is up 47% from the March bottom. So today, I'd be looking at potentially buying those stocks that you love, that are growing their earnings and that have got share price momentum. Now, expect CSL to see a bit of a pullback today and fall under $300. Keep in mind the potential COVID-19 vaccine was not a revenue stream for CSL. The CSL are, of course, the biggest blood plasma therapy company in the world, number 2 in flu shots. And once restrictions ease, blood plasma collections are expected to pick up. Hence, brokers like UBS have got a $346 price target for CSL. Credit Suisse, a $325 target. What else to watch? AGMs today are being held for Pendal and Westpac, so keep an eye on their AGM minutes. As for trading ideas that could be worth a look, Baby Bunting, where you may buy some of your baby goods, was reiterated as a city buy with a $5.48 price target for BBN. Now, the birth rate has been declining, as we all know, which has been a headwind for earnings growth, but Baby Bunting is expanding their stores and they're now at 56 and they're targeting 100 stores. Citi says there's scope for further growth and the business is planning to expand into New Zealand. So expect more catalysts to come after those plans are brought to market. Plus, the industry is consolidating, which means BBN is likely to grab more market share and it's trading at 19 times earnings. So keep an eye on Baby Bunting. And secondly, Beach Energy was initiated as a bell potter buy with a $2.29 price target. That implies about 24% upside in a year. So 24% upside in a year for BPT. Now, what differentiates BPT from its peers? It's not exposed to LNG markets or to coal seam gas. So over half of BPT's production is in conventional gas sold to domestic markets. And this revenue is much less volatile than oil-linked production. So keep that in mind for Beach Energy. Lastly, keep an eye on XDC, Breville and Enero, all showing strong bullish charting signals according to Trading Central. I'm Jessica Ramir with Bell Direct. Stay safe, happy trading, and I'll see you for the weekly wrap.